Welcome everybody to Accounting Explained. I do hope that you are having a wonderful day. Accounting Explained is a series of educational videos with some unique but easy to understand explanations of both basic and more difficult accounting concepts. Okay, so the main topic we are talking about is debits and credits. In part 1, we have learned what assets, liabilities and equity are. We also now understand the basic accounting equation, meaning that their sum is always equal to 0. If you have not watched part 1 yet, it is recommended that you do so. It is still our plan to reveal in part 3 the mysterious substance of debits and credits and explain in part 4 what is the balance sheet. Slowly but surely we are getting to the promised debits and credits. We just have to explain one more accounting term, double entry. So let's have the double entry explained straight away. And the term double entry is very much related to the basic accounting equation. If we change one component, another component must change as well, so that the equation still results in 0. We cannot change just one component because the equation would be out of balance suddenly. We do not want that happen, therefore the only way to keep the equation balancing is to make a double change. What you can do is a plus and minus double change within one category, for instance, increasing one asset and decreasing another asset by the same amount. And the same plus and minus kind of change for liabilities or equity. There are also other possibilities when we are changing two categories at the same time. For instance, we can change assets and liabilities by the same amount, or changing assets and equity by the same amount, or to change equity and liabilities by the same amount. And because of the double entry, the result of the equation is always 0. Let's meet John Smith again. We already know that on the asset side, he has some investments in shares, he owns a house, he has some cash. On the other hand, he owes money to the bank for mortgage and for the credit card. In total, John's equity is $140,000. We also know that in accounting, assets are shown with a plus, while liabilities and equity are shown with a minus. Now let's consider some financial events which happened to John during the past month. Just be aware that this case study will follow through the entire remaining portion of these video lessons until the end. And the question that we are going to first answer for each event is: how do the assets, liabilities and equity change as a result of those events? Obviously, bearing in mind that for each change the impact is double, accountants have decided to call it a double entry. And the first event is very good news for John. He has received a monthly salary from his employer. $3,000 was added to his bank account. With the first event, earning a salary, the question is what has changed among John's assets and liabilities? Obviously, the cash has increased, but what is the other item that has changed? As John has made the money, he has become richer, and it must be the equity that has increased. Actually, both cash and equity have increased by exactly 3,000. Resulting cash will be 10 plus 3 equals to $13,000, and total assets will have changed to 303,000. Resulting equity will be minus 140 minus 3 equals to minus 143,000. And because we have added and subtracted the same number from the accounting equation as a double entry, the equation still balances. 303 minus 160 minus 143 is indeed 0. In the second event, John realizes that he has some extra cash, so he has decided to buy some extra shares. He is spending $5,000 of his cash, and John's broker has added shares worth $5,000 to his investment account. For the second event, investment in shares, the double entry is straightforward. Cash decreases and shares increase, both by 5,000. John has only traded one asset, which is cash, for another asset, shares, with the same current value. As a result of the double entry, the resulting cash will be 13 minus 5, which is $8,000, and the resulting shares will be 70 plus 5, which is $75,000. Total assets or total liabilities or equity have not changed here. We can only say that the structure of assets has changed. John owns more shares and he owns less cash. John has not become richer or poorer at the current moment. His wealth rather depends on future development of the share's value. And as we have made the double entry, plus 5 and minus 5 in the accounting equation, the sum of assets, liabilities and equity is still 0. As the third event, we consider that John has spent $1,000 for a weekend trip to London and he has charged the amount to his credit card. Therefore, his credit card debt increases. In event number 3, credit card spending, it is clear that the credit card debt increases by 1,000, but what is the other item of double entry that has changed as well? This is a spending which decreases John's financial wealth, so it is the equity that will go down. However, because equity is initially a minus, we decrease it by adding a positive number. So the resulting equity will be minus 143 plus 1 equals to minus $142,000. And we already know that the resulting credit card debt will simply be minus 5 minus 1 equals to minus $6,000, and total liabilities also have increased by 1,000 to minus $161,000. And as we have changed two items by the same amount, 1,000, but with opposite signs, the accounting equation must be valid. Let's check. Plus 303 minus 161 minus 142 equals to 0. Event number 4 is about some good news that John's broker has brought to him. John's shares have actually increased in value by $10,000. In event number 4, revaluation of shares, the double entry will be pretty straightforward. The shares have increased by 10,000, so the resulting shares will be plus 75 plus 10 equals to plus $85,000, and total assets will have become 313,000 plus. And as John's assets have now higher value, our friend has become richer again. So his equity has increased by 10,000, and the resulting equity, all with negative signs, will be minus 142 minus 10 equals to minus $152,000. And because we have changed exactly two numbers with opposite signs and by the same amount, the accounting equation must be valid again. The sum of 313 minus 161 minus 152 is still 0. In event number 5, John has decided to repay his credit card debt partially in order to avoid paying unnecessary interest. So John has transferred 4,000 of his cash to his credit card account. In event number 5, credit card repayment, both cash and the credit card debt decrease. Cash is actually going down by $4,000, resulting cash will be plus 8 minus 4 equals to 4,000, and total assets have become $309,000. The credit card debt, on the other hand, decreases by the same 4,000. The resulting credit card debt will be minus 6 plus 4 equals to minus $2,000, and the total liabilities also decrease by the 4,000 and have become minus $157,000. John has not become poorer or richer here, therefore the equity does not change. And because with the double entry we have added and deducted two equal numbers to the accounting equation, let's check one more time that the sum of 309 minus 157 minus 152 is still 0 indeed. We can reflect the movement of various items of John's estate in the following table. We started with the opening balance of John's assets, liabilities and equity, and the accounting equation was balanced to 0. Then we had 5 various events which moved assets, liabilities and equity in various directions. However, it was always 1 plus and 1 minus of the same amount. The change was always double. And such a double change is called a double entry in accounting. And finally, if we now add up the numbers across all the rows, we are getting the new values of John's assets, liabilities and equity after the 5 events. And because our starting position was balanced to 0, and because each double entry for every event was balanced to 0, John's final values of assets, liabilities and equity are also balanced to 0. The accounting equation is always valid. So in summary, we have learned that double entry is a simple mechanism to keep the basic accounting equation always balancing to 0. We cannot change just one component because the equation would be out of balance. We have to always make a double entry, which means a double change in the equation, and therefore its result is always 0. So we are now done with the second part, double entry, of our 4-part video series dedicated to debits and credits. Previously, we also covered part 1 about assets, liabilities and equity. You have done a great job and you are now welcome to go ahead and watch part 3 and part 4, where we finally invite debits and credits on the stage.